Alaska Performance Partners. Count on performance, not promises.
Hey there, it's Amanda Pineda with Alaska Performance Partners, and today's video is going to be in some common misconceptions. But before we get into that, I would just like to say a little bit about myself and how I became a real estate agent. I'm originally from San Antonio, Texas, and me and my husband moved from San Antonio, Texas to Anchorage, Alaska back in May of 2017. The reason is because my husband is active duty military. He currently serves in the Army. Which is kind of fitting for me doing the VA loan video this week. Moving from Texas to Anchorage was a big change for us. It's really flat and hot in Texas, and up here you got beautiful mountains, lots of water, really good weather in the summer. So I've definitely learned to get out and love the outdoors. I like to hike. Me and my husband like to kayak. We go fishing every once in a while. I'm just learning how to ski, so that's super fun, and I'm getting out and enjoying the winter this year. I picked up ice skating, so I've been regularly ice skating, which is super fun. I've really been enjoying my time here in Anchorage, Alaska, and I've really grown an appreciation for the outdoors and the Alaskan way of life. So I'm really happy to be here. So let's jump into the VA loans and just some things that are kind of confusing, because last year me and my husband put in our first VA loan application, and there were some things that came up that kind of surprised us. You know, as first-time home buyers, the only thing that we really knew about a VA loan was that it was a 0% down, and that's it. So you didn't need any money to put down for a down payment in order to secure a loan for a home, which is true. But just because you don't have to put any money down does not mean that you should not have money saved up for other costs that are associated with buying a home, like having to pay for a home inspection, having to pay for some closing costs. Now, the good thing about a VA loan is that there are some closing costs that a seller has to pay for, which is really, really nice. But there are other things that, you know, you are going to be responsible for, especially in the market that we are in right now. Currently, with the very, very low interest rates that we're having and experiencing right now, we are seeing a really big influx of buyers and a really low inventory of homes on the market, which are the sellers. So when there's a really low amount of sellers and a lot of buyers, you find yourself in kind of competition with the other buyers to secure a home. And if you were to offer a full price offer but you ask for closing costs, and another buyer offers the exact same thing but they don't ask for any closing costs to be paid at the end of the transaction, more than likely they will be the ones to get the loan. So in that case, you don't want to be asking for closing costs, but it all depends on your situation, how long the home has been on the market. A whole nother thing that's definitely something to discuss with your agent and how you want to approach that. But that is a cost that might have to come out of pocket. It sometimes can be rolled into your loan, but that is an expense that a lot of VA buyers do not expect and are actually very surprised when it comes time to actually put down that money and having to pay it, or at the very end, or wherever you are in the process and you find out that you need to put some money for this. It's definitely a surprise. It was a surprise to me and my husband. When it comes time to put in an offer for a home, you do have to put down some earnest money, which is kind of like, say if you were going to get married and your husband or boyfriend asks you to marry them and they give you a ring, this is like their promise to you. So when you put in an offer, your earnest money is basically your promise, and that you're showing that you are serious about buying this home. So that's another thing that a lot of people don't expect, is having to put down earnest money. It's not a down payment, but it is a commitment to buy this home. Let's talk about qualifying for a VA loan, because just because you are a veteran or just because you are actively serving doesn't mean that you automatically qualify for a VA loan. Some of the qualifications are: you have to be active duty for at least 90 days during wartime or 180 days during peacetime. And if you are a veteran, you have to be honorably discharged and then have to have served the same amount of qualifications that I just mentioned. So those are some qualifications. Being honorably discharged is a big one. And in order to find out if you do qualify, you can go to va.gov. You can Google it. You can go to va.gov and look up your certificate of eligibility. and that will tell you if you qualify for a VA loan or not. Or you can reach out to me or Larry or anybody on the Alaska Performance Partners team, and we will get you in contact with one of our trusted lenders, and they can find out for you if you are eligible or not. So one of the many benefits of having a VA loan is that it's 100% financing, so you don't have to put any money down, which is what everybody knows. So you don't have to put any money down. And another great benefit of having a VA loan is that you don't have to have mortgage insurance. And mortgage insurance is associated with FHA loans and conventional loans. But as Alex Nunez briefly touched on in our last video, with FHA, you have to have a mortgage insurance for the entirety of your loan. With a conventional loan, after a few years, you can opt to have that taken out, and that'll save you a lot of money on your loan in the future. So a good thing about VA loans is that you don't have to have mortgage insurance, but associated with the VA loan is a VA funding fee, which will be based on however much your loan is. So be prepared to see that on your paperwork. So a lot of people really ask, like, what is a VA loan? Like, and the definition of a VA loan is essentially a guaranteed loan by the Veterans Administration, which means it's kind of like insurance, but it's not for you. It is for the mortgage company. If you were to default on your loan or not be able to pay it, go into foreclosure, it essentially kind of protects the lender. The VA funding fee is something that is financed. It is not something that has to come out of pocket right then and there, but just be prepared to see that on your paperwork. And those are just a few things that I wanted to cover in this week's video. I know that as a first-time VA home buyer, some of them are very young. Some of them don't know anything else about a VA loan other than the fact that it's zero down. So I have experienced some people coming in and they're like, we qualify for a VA loan, but they don't have any other money saved to be able to do their earnest money deposit, have money for closing costs, have money for an inspection or an appraisal, and just all the little things associated with buying a home. So that's definitely something that you want to be saving for and have on hand just in case. That's something that you want to have just in case, because very, very dependent on the situation, on the home, on the seller. Everything depends on everything. And so you definitely want to have money set aside to be able to buy the home of your dreams and make sure that you don't lose out on it. So if you have any questions, my number is 907-312-0944. Shoot me a text, give me a call. I'll be able to refer you to one of our trusted lending partners with Alaska Performance Partners, or reach out to any one of us on the team, and we'd be happy to help you and answer questions and get you into the home of your dreams. So thank you so much for tuning in, and we'll see you guys at next week's video. Bye.